Hey there, YouTube. I wanted to make this video. This might be the last video I make of 2019, but I took some time today to scalp Facebook and looking over my stats for the year. Facebook is actually one of my best stocks. It's one of the ones that I can trade on the short term, and that I've had really good success throughout the year. Very high win percentage rate. Um, I've had a couple down days in the year, but not too many. It's definitely my best stock for profit. So I wanted to kind of capture how I scalp it and share with you a little bit of what I do, and I can recap today. Today I traded it. Today's Christmas Eve. The market's open for half a day. It closes in about an hour. It's 12 now, but I only traded it for about an hour. I traded it from about 10 to 11. Um, the reason being the spreads really weren't where I wanted them. Usually I like a 2-cent spread. When I started trading it, it had almost a 4-cent spread. I had to kind of fight for price and that kind of thing. There were some crazy moves, and we'll go over those. But basically, it's tough. It's tough to concentrate on one stock, watch the tape, watch the prints, and focus without taking a break. So I gave it an hour. I made a little over $100, $111. There's about $5 worth of fees in there. I use Fidelity. This is Fidelity Active Trader Pro. If you haven't seen it, sorry for the strange layout, but I am covering up my account number and some things with the way I have this covered. I usually, for my view, I use two screens, but I just kind of want to go through a couple different things in this video to show you kind of my mindset and technique, and then we'll step through the trades. Basically, I made 6 trades in the hour, and I'll try to recap what I was thinking, and it helps me kind of go over the trades as well. So first of all, I do use the level 2. This is Fidelity Active Trader Pro. It has times at sales. It's real time. I kind of have, there's no hotkeys in Fidelity Active Trader Pro, so I haven't built out like keybinds to say using auto hotkey or anything like that. I do point and click, but I'm really fast at it. But I can use these buttons to pre-fill my tickets, and I can trade and cover really quickly. So um, just to begin, when I consider entering a trade, I am looking to where I can get out. So is a lot of algorithm movement on the level 2. There's no doubt high frequency trading and algorithms play a big part in price, and things can change in a second. Um, but still, there are times when the market slowed down quite a bit right now in this last hour. So there are times like, for example, if you can make this out now, you got 205.97.98, and then you got 206.00. It just flipped, but you can get an idea of where you might be able to cover. Yeah, it changes, but you have some price levels within a cent or two where you can probably get covered if you need to either buy or sell and that kind of thing. So that does play a part in my entries. And again, I like spreads that are only 2 cents or even less. That's what it is normally. Today it's been about 3 cents, even 4 cents when I started. But um, usually I'm not adding liquidity to the market. That means I'm not using limit orders. I'm literally doing short at the market or buy at the market and cover at the market or sell at the market. It's hard to get a limit fill when it's in your favor, but I do it when I plan ahead. Like if I know I want to get a certain price, I'll go ahead and put a limit order out there and wait for price to hit my price. But it's not the majority of my trades. 80% of my trades or more are market orders because things move so quickly. You just need to hit it, get the price, and then manage that. So a couple things to consider. If you can see it on my screen here, I do have the ATR down here. I use the average true range over, this is the 1-minute chart, and that's what I scalp on. But I do have the ATR here. It's a 14-period ATR. And the reason I do that is my general rule is I don't want to take a loss in any scalp that is greater than the ATR. So the ATR, the average true range over, the last so many periods. Let's say we're in here and we're trying to find an entry around this bar. If you look at the ATR down in the lower left, it's 0.14, so it's 14 cents. So there's no reason for me to take a loss. If I entered a trade here and for some reason I was on the wrong side, I kind of glance at this and I'm like, in no circumstances do I want to take a loss in a scalp that's greater than 14 cents. You just tap out. And usually I don't get to that point. I think today with my 6 trades, the worst trade I had was against me about 11 cents. Um, and it still didn't hit the ATR, but I knew I had a good price. It was, I can go over that one in a little bit. But most of my trades, I want them to go in my favor pretty much immediately. Um, or I get out. The other thing I do, I mentioned in my other videos, I do use a time stop. Most of my trades, if it's not in the money, if I'm not profitable within the first 7 minutes, I'm usually looking to get out at 6, 7 minutes too. It's what works for me. I can look over just hundreds of trades using this kind of style, and if it's not in the money in the first 7 minutes, it almost never is. So that's something else I use. I use a time stop and I'll just look to get out. I'll get the best price. Once 6 minutes comes around, I kind of watch the clock, and if I'm still in a loser, I just pretty much either get out or get out within a minute and try to get a little bit better price. So with that, I do watch the tape. I do watch the prints to see where stock is printing. Are they hitting the bids? There's a lot of talks. Some people I really admire is SMB Capital. These guys do it right. They're a prop trading firm, and they have a ton of YouTube videos that are very educational. They have some training and stuff like that. It's crazy expensive. But there's also 2 books out by the co-founder of SMB Capital, Mike Bellafiore. He's written a book called One Good Trade and then one called The Playbook. They're excellent. I've soaked those up in the last 6 months. I was surprised I didn't come upon them before, but it just proves that there are guys out there making more than $1 million as prop traders in the current markets. And these guys work hard. They do a lot of prep before the market. They analyze their trades after the market. And the other thing that I picked up from them is using TraderView. So TraderView is there is a free version of this platform. I kind of have today up on this, but TraderView, the UI isn't crazy fancy. I'm not a fan of the charts because they use red and green, and I've got a red and green color blindness. But as far as analyzing your trades, there's a lot of good stats here, and this is just their free platform. I'm probably going to go ahead and pay the $29 a month in 2020 because the analysis is great. And this is actually today's trades. I had 6 trades. I had no losing trades. Average hold time is 4 minutes. Average trade gain and losses about $19. I didn't have any losers, so it doesn't. The volume is 2201. That's the total volume. This is the game they have for me. When I import these from Fidelity, it's about $4 less or so because I pay about a little less than $1 a trade with FINRA fees and stuff like that. There's no commissions with Fidelity, just like most of the major brokers. They don't charge commissions anymore. But my largest game was $38. I was only trading 200 share lots. It's the same thing I did on Black Friday. I didn't expect much from these days. They're just kind of coming in to kind of have a stress-free, practice my craft kind of day. Same thing I did on Black Friday. Generally, I can trade 300 shares, 400 shares. 300 shares is what I've traded of kind of the bigger cap ones like Alibaba, Facebook, Apple. They're about $200 a share or more. But I traded 200 share lots today, and we can go over those executions in a second. But anyways, there's my P&L. If we want to look at the orders, here's the orders for the day. And I'll kind of break these down, and we'll just look at my entries, and I'll kind of recap what I was thinking for my own benefit too. But I started at 10. I sat down. And strangely enough, every trade I took today was a short. I was short. I do have a tendency to favor short selling more than going long. I'm not saying I can't do both, but I do favor shorts, and especially the way that Facebook opened up, I was looking to short. So these are the times and the trades I executed. But let's take a look at these on this chart, and let's see what I can figure out. So I do use volume too. So this view is kind of what I have up when I'm trading. Again, I use 2 screens, but I do watch the ATR, so I make sure I don't take a loss bigger than that. But I'm also looking at the volume prints on the 1-minute candles because there's hints here of what's really going on in price action. A really big volume candle you can, make better guesses on where price may go in the short term, and you get some hints of overall what's happening in the stock. So the 1 minute chart, this is actually the 200-day moving average. Um, I also use VWAP. Fidelity doesn't have that built in. They have it where you can see what it is, but they don't have it on the charts as an indicator. So the 200 period moving average, not 200-day, 200 period moving average is usually pretty close, but I don't stress over it. I can always look on the web. I use tradingview.com. Tradingview.com. I've mentioned that in a couple of my videos, and that has a VWAP indicator, so I can kind of keep an eye on how we're trading towards volume weighted average price. But anyways, this is my view. Here's volume. Let's recap a couple trades. And off screen, I'm just going to take a look at the execution times. Again, I'm hiding my account number in here. Not that I don't trust you guys, but so the first trade was approximately, maybe we can do it this way. First trade was at 10 o'clock, and I covered at 10:01. And it looks like I made about 15 cents. So it was about 30 bucks on 200 shares, and the trade was only a minute and 13 seconds. So let's take a look at the 10 o'clock candle and see what this looks like. So I was in here. The reason I was shorting was this is how the stock opened up. Here's the open, and you can see there's this huge downtrend. There's decent down volume here too. So in perspective, I thought, hey, there are sellers. There's a lot of this dark blue, which to me is a down candle. So I'm going to look to short, retracements to price. So 10 o'clock is right here. So here's the selling. I was watching the level 2. I saw this significant candle. It's a big size candle. The volume wasn't crazy, but we had a lot of up candles in here. I figured that was good enough retracement to go ahead and take a short. And like I said, the level 2 favored me too. I made sure I shorted at a price where if it didn't move almost instantly, I could just go buy it on the offer. There was plenty of stock there. There were at least a couple of offers. So I tapped out somewhere in this candle, and within a minute or so, I covered down here. So my price again was, I showed it at 205.46, and I bought it 205.31. So looking at this, it was within this candle, and the next candle stayed lower. So it was really like a trade for a minute, but it was a $30 trade essentially. And that's scalping. There's no guarantees. Again, today I had 100% win rate on 6 trades. Normally it's like 70, 80%. A lot of times my losers are a little bit closer to ATR, meaning I can lose 10, 11 cents. My winning trades are usually maybe 6 to 10 to 11 cents. It just depends on the day. There's obviously a variation, but my losing trades are a little bit bigger than my winning trades. I do kind of buck that trend, like, oh, you should have at least kind of 3R in your winners and all that stuff. I scalp. I don't have to do a ton of homework. I just look at price levels. I look at risk. I look at level 2, and I'll take a trade if I have a decent kind of risk area. Here you can see this retrace this whole spot. I just said, you know what, this is a good price. And it turns out this was a level all the way for the next 7-8 minutes. It turns out that this is a significant level until the price starts to move above it. But for a scalper where sometimes you can only, you may only lose a penny or two, it's worth taking a shot, especially on a retracement after a big down move. So that's what I was doing. Let's take a look at the next trade. So the next trade was a short sale, and it was at 10:18. So about 15 minutes later, I remember I wasn't happy, like I said, with the spreads. They never really came down. Usually at 10:30 or so, the spreads get a little bit better. They get a little bit tighter, so I don't lose price by putting in market orders. So the next trade was at 10:18. And it looks like I only made 2.5 cents on that trade. So that was another example where it didn't go my way, and I got out, I guess, pretty quickly. This was 10:18.54. I got out at 10:21. So less than 3 minutes I was in the trade. It really didn't move in my favor, so I tapped out. So let's take a look. 205.73 at 10:18. Boom, boom. So it was right in this candle. So I think my mindset here was I saw this starting to flatline. It had a decent kind of move up. We were getting close to the 200 period moving average. I figure VWAP is around here too. And while they say never short a dull market, I figured this is a decent enough retracement. If the sellers were still active, they were going to go ahead and push this thing back down. So it quieted down a little bit. It just seemed like a safe entry where there was plenty to buy. So I gave it 3 or so minutes, and I think on the level 2 and on the tape, I just didn't see the action I wanted, so I got out. Excuse me. So I made 3 cents, and I just got out and I looked for the next trade. Nothing really fancy with that. With the next trade, it was at 10:30, and I got out at 10:32. On this trade, I only got short. This is one of those situations where I used a limit order. I had a sell short at 205.98. So the stock started to go up. I'll show you this in a second, 10:30. And I only got 101 shares. I got a partial fill at that price. I was trying to get this really good price. They only gave me 100 shares, but I ended up making about 14 cents on that trade, so about $14. So it was 10:30 to 10:32. So it moved really quickly, but here's 10:30. This is what I was shorting. See this bar, this goes right back to the 200 period moving average, and you can see how price bounced off it. So I saw them kind of pushing up. I kind of noticed that this wasn't going down after my last trade. I felt like there was a buyer out there. The volume wasn't crazy, but they do this, especially on short days. They can push this price around for the very short term. So the other reason this area is safe to short at, and the reason I was trying to get this price, I thought it was really good, was if you look over here where this action is off the open, uh, this support is going to, potentially become resistance right around here. So sure enough, it came right up against the 200 period moving average and came away really quickly within 3 minutes. So this is the trade I got. I got it almost perfectly, but I only got 101 shares. So I got that. It came off within 3 minutes, and I covered. So there was another $15. And the next trade. So the next trade was at 10:41, and I got out of that within 3 minutes as well. Oh, I'm sorry. Okay, so this is the trade that went against me. I did average in this, so this is a little bit better price. Again, I was trying to short that really good 205.98 area. So I shorted at that spot again about 9 minutes later, and the stock went higher. It did move against me, and it went to about 206.10. So this is the trade that I was in a losing trade. It was almost at ATR at that point, so I was out about 14 cents, but I shorted some more. I do this from time to time. I'm very tight with it, but I knew it was a good price. I knew it was kind of a short run, and I'll talk about what I mean in a second. So 10:41, I shorted a little bit more at 10:44. So let's take a look at that. So I got right at the 200 period moving average again. This is my last trade over here. This is where I covered, and we got up right against it again. So I took a shot and I tried to short it again, thinking that it would come off. It didn't. They popped it up, and this happens all the time. This isn't a huge move. It's only about 10 cents. But what this is this run shorts, and this causes the price to go a little bit higher. So it did within 1, 2, 3 minutes. It was a little bit higher. I shorted some more around 206.10. Not the perfect price, but within a few minutes you can see it drop right back down. So 1, 2, 3, 4, 5, 6, 7. Within 7 minutes, it's back in my range, and my average price was about 206, 03, 04, something like that. And I ended up covering both lots at a profit. So I shorted some at 205.96, some at 206.10, and then I covered 200 shares. I covered half and half, 205.93 and 205.91. So it popped up a little bit more, but I did get out profitable on the lot that was covered up here by a decent margin, almost 20 cents, and the other one I made a few cents on. At this time, price started to get a little crazy. These are a little bit bigger. The volume really hadn't come in here, so this is when I was less enthusiastic about continuing on the day. It didn't seem like the stock was really weak. It didn't seem like the buyers really had control. It had trended up, but if you drew a trend line here, it broke the trend line, and I just felt like I didn't want to trade anymore. The spreads are too high today. Again, they were like 3 and 4 cents instead of 2 cents. I was really just kind of putting feelers out there to see what was going on. And once you see this action over here, see these wicks, these really wide ranges, you think this would be good, but you really can't. I couldn't get a clear picture from the level two of like who has control. Is it buyers? Is it sellers? Um, so I think I put on one more trade. Let's move this out of the way. Yeah, so the last trade, um, this was the cover, this was the cover. So the last trade was at 10.55. I shorted 200 shares at 206.14. Again, a higher price, higher than where I had it last time. I ended up covering it at 206.02, and I was in that trade for literally a minute. So within 60 seconds, price swung about 12 cents, and I had 200 shares, another $24. So let's look at that one more time just to see what the candle looked like. 10.55 to 10.56. So that was one of those where you get it, it goes your way right away, and you just take the profit. Again, for me, a 10, 12 cent profit on a scalp trade where I don't intend to hold it, I don't have kind of a longer term view, it's a great trade. You just take it and you move on and you do it again. So here's the candle at 10.55. I must have popped right in here on this next candle. I shorted it, and you can see it just came right back. Um, so I probably had an amazing execution. I think I shorted this wick up here because I was looking at this move up here. I said this isn't really going to go much higher than this. It's already a little bit above, and I was right within a minute. And I covered. And at that point in time, you see these wicks and these candles. Price was all over the place. It was just up and down. It was just it was hard to tell who was going to win this battle. I didn't really feel comfortable um, shorting because it just seemed like we're stuck in this range. I didn't really want to buy it. It did go higher in the last hour or so. Let's see where it is. Um, so as we approach the end of the day, they did just slowly grind it up here. This is like the worst kind of trading for me. I don't do well in just a slow grind. I need the price movement and the action. And then it looks like it came off recently down over here. But that was it. 6 trades, no losing trades. Only one trade went against me really significantly, about 14 cents. And that's how I traded today. But hopefully that gives you some insight. Use volume, use big volume to think in terms of institutions finishing up a buyer or a seller. In this case, when I saw this candle, this was at 10:38. I was still shorting because I thought that this kind of uptrend retracement back to the 200 period moving average. I figured whatever buyer was out there was done for the day. So what the whoever's buying this for him, they finish it up, print a bunch of stock, and say, okay, you bought the last who knows what, 500,000 shares, whatever, at such and such price, and they're done. And price did come off immediately after that print, or this candle with a high volume, but it just kind of it slowly trended up a little bit more. So the buyer must have still been around and just bought a little bit more cautiously, and it trended up. But look for these big prints. When you see these darker candles, these are the sells. When these come in with higher volume than what's around it, I'm still thinking of a short, and it worked out in this case, right? This is a down candle, decent volume comparatively, other than this giant thing. Both of these sell candles are bigger, so I was still thinking, hey, the sellers still have control, the sellers still have control, and that's why I just kept shorting. So all my trades were short, though it did kind of over the longer term trend up a little bit. I am not kind of a buy and hold person. I would rather do what I do and repeat it 20 or 50 times a day. But that's it. Um, I hope that gives you some insight and some confidence that you can beat the algorithms. You can beat high frequency trading. If you're very familiar with the stock, you know what conditions are good for your style, which I do. Facebook is my best stock. 6 for 6 today. I didn't trade very large, but I only traded for an hour. So $100 an hour, I'll take it and enjoy the holiday. But anyways, I hope that helps. If you'd like to see more videos like these, throw something in the comments below if it was helpful, or if you have any questions, throw those down there too. And as always, subscribe to my channel, support me, and I'll make more videos. I'll share kind of my techniques and what I do. Um, some of this analysis is certainly applicable in the higher time frames. I just like to scalp. I like to trade intraday, and I like to be out of my positions. I don't like the news overnight. I don't want to be caught in something crazy when something breaks. So this is the way I do it. But some of the mindset, the support and resistance, and some of this volume analysis is applicable any time frame. So use it. I hope it helps you. Until then, I'll see you next time. Have a great new year.